Welcome to today's deep dive. It is February 2026, and if you're looking at your financial dashboard right now, the warning lights are, well, they're flashing in completely conflicting colors.
Yeah, they really are. It is a weird time.
Because we are pulling from some fascinating sources today to look at the U.S. dollar index, which is down about 8% over the last year, sitting right around 97. By traditional logic, that implies an economy in free fall. But look at actual activity, like AI infrastructure spending is just exploding. Private sector demand is hot.
It's a massive disconnect. Usually a booming economy acts like a magnet for global capital, right? It drives the currency's value up. But right now we're seeing the exact opposite. The dollar is bleeding value while the economic engine is revving louder than ever.
So our mission for this deep dive is to figure out why the dollar is losing this tug of war. We've got sources detailing three specific forces. First, a statistical illusion in the GDP, then a diplomatic disaster over Greenland, and finally the sudden rise as a strategic Bitcoin reserve.
To understand that weakness, you first have to look past the optical illusion in the recent data. I mean, the headline number for Q4 2025 GDP was what, 1.4%?
Yeah, 1.4, which looked incredibly weak and fueled all that recession talk.
Exactly, but the sources point out that number was artificially crushed by the record-breaking 43-day federal shutdown.
Right, a total data distortion.
Yeah.
If you strip out the government halt, private sector demand is actually accelerating.
And that acceleration is about to get some serious fuel. We need to talk about the One Big Beautiful Bill Act.
The OBBA, a legislative mouthful.
It really is. But the sources highlight a fascinating mechanism here. This bill raised the SALT cap to $40,000 and eliminated taxes on tips.
But crucially, it changed the deductions, right? Not the tax rates themselves.
That distinction matters so much. Because it was just a deduction change, employers didn't adjust tax withholding from paychecks last year.
So millions of Americans have been overpaying taxes all year without realizing it.
Yeah, creating an accidental forced savings effect.
Meaning, the government effectively held onto that cash interest-free, and now the dam breaks. As people filed their returns here in Q1 2026, we're looking at a staggering $150 billion in refunds hitting consumer bank accounts all at once.
Right, a delayed stimulus bomb hitting an already hot economy. But normally that kind of growth buys you a strong currency. The dollar's dropping because money goes where it feels safe. And right now, safety and the U.S. government are kind of uncoupling.
Which brings us to the Greenland crisis.
Yeah.
It sounds like bad fiction, but the administration's renewed push to annex Greenland has caused a genuine diplomatic rupture with the European Union.
The geopolitical stress is bad, but the market reaction is the real story here. Historically, when global chaos hits, investors run to the dollar as a safe haven. This time, they ran away from it straight to gold.
Gold hit an all-time high of nearly $4,967 an ounce.
That price is a screaming siren. The market is telling us U.S. Treasuries aren't the unquestioned risk-free vault they used to be.
It probably doesn't help that trade policy has turned into legal whiplash. I mean, the Supreme Court just struck down the use of IEPA for tariffs, calling it unconstitutional.
But before markets could even cheer, the president immediately used a completely different loophole, Section 122, to reinstate them.
Creating an environment of total uncertainty. Investors hate that. But beyond bad policy, the actual plumbing of the financial system is leaking. We are seeing the rise of mBridge.
That's the Chinese-led platform for digital currency swaps. And it's no longer just a pilot program because the data shows it is processing $55.5 billion in volume.
$55 billion of trade settled instantly without ever touching the U.S. banking system.
It proves the monopoly is breaking. And this brings us to the most profound paradox in the source material. The U.S. government sees this competition, and their solution is to buy Bitcoin.
This was the wildest detail. The U.S. officially established a strategic Bitcoin reserve, currently holding over 328,000 BTC. It feels like the U.S. is hedging against its own product.
That is really the only way to read it. By putting a decentralized, scarce asset on the sovereign balance sheet, the U.S. government is implicitly admitting that the fiat dollar isn't enough anymore. They are diversifying.
The ultimate, if you can't beat them, join them.
Exactly. The dollar isn't collapsing tomorrow because the U.S. economy is too massive for that. But the monopolar world where the dollar is the only game in town, that is over. We're entering a fractured financial reality where the U.S. is just one big player among many.
So, stepping back, the takeaway for you listening is pretty stark. The rules of money are being rewritten in real time by the very people printing it.
Which raises a provocative question to leave you with. If the U.S. government, the issuer of the world's reserve currency, is nervous enough to hedge its bets with crypto and doesn't fully trust the dollar's future dominance, why should you?